Hello, I'm Bernard Hickey from interest.co.nz and welcome to an investing special where we have big news from two companies in the finance company sector. Firstly, St. Laurence Limited. This is the property investment and finance company run by Kevin Podmore out of Wellington. It's just announced that it is planning to stop new lending, which is a big move. It says it needs more time to get its finances together to make sure that it repays all of the loans that it has from mum and dad investors. About 9,000 mums and dads have $250 million invested with St. Laurence. Now this is a real shock because St. Laurence was seen as one of the bigger and more stable finance companies. And separately, Strategic Finance, which is New Zealand's fourth biggest finance company, it has announced it's conducting an intensive review of its loan book. And it's also told us here at interest.co.nz that several people are looking at buying Strategic Finance because its owner, AllCoHit, an Australian company which is itself in a little bit of trouble, is looking to sell that stake. And Strategic Finance needs some secure, solid corporate backing. We'll know within 3 or 4 weeks whether these discussions have got very far. Meanwhile, we've found out that Strategic Finance, its biggest loan is to a Fiji resort development called the Hilton Denarau, about $70 million. Now this works out at more than 60% of Strategic Finance's equity, and it doesn't look like it's going to be repaid for some time. Stage 3 hasn't even been drawn up yet, and this development loan, much of it is not going to be repaid until Stage 3 has been built. About 99% of Strategic's loans are to residential investments and property developments, and the most of those are what's called capitalised loans. That's where the loans are not repaid every month or serviced every month. They only get repaid with interest when the project is finished, and there's real problems at the moment with property developments either not being finished or not sold off the plan, or once they are built, not being sold. And that means that the financiers, often finance companies with second mortgages, are not being repaid at the end of that. And that's what's driving all this trouble in the sector. A real worry, because now we're into the finance companies who are seen as likely to survive and ones with more stable structures and managements. I'm Bernard Hickey. That was a special investing report for interest.co.nz.